So they talk about it as a hedge against inflation. Is that the same reason in your analysis that Bitcoin is rising to record prices as well? That there's a scarcity of it, so people are sitting there and saying if inflation is high, there's a scarcity of those types of assets, we will buy that.
So it's really hard to know with Bitcoin because it hasn't been around that long. So I think the answer to that is we don't know. What we do know, however, is that earlier this year in January, the big regulator of financial markets in the US, the SEC, came out and basically said, we're actually going to give the okay to ETFs in Bitcoin. And so some of the big ETF providers,
BlackRock,
correct, jumped on top of that. And that's meant for a lot of investors, there's now a much easier way to access Bitcoin. And so I think that's been part of what's driven the rise in Bitcoin, which is that for a lot of investors, they now don't have to do it on a sort of crypto exchange. They can do it in a mainstream sort of way through an ETF. So that's been one driver. And
also, just to pick that up, that ETF has to actually at some stage buy the physical Bitcoin.
Correct.
So that creates demand for those coins, right?
Yeah. There's also, what's known in that world as a Bitcoin halving event coming up in April, and that's where the rate of production of Bitcoin reduces. And so that sort of adds to this perception of scarcity for that, which often pushes prices up. And I think also this perception that maybe interest rates have peaked for the cycle and are coming down at some point also means that the opportunity cost of holding things like gold and Bitcoin is lower now. So when rates are high and going up, then we know that we're foregoing income. We could buy a bond, we could put our money on term deposit. When rates are coming down, that cost isn't as large, and so people might be a bit more happy to buy those two things.
Okay, so when you go back in hindsight, will you do the same analysis on, say, cryptocurrencies and Bitcoin as you have done on gold to look back in hindsight and say, well, maybe optimally you should have held between 2 and 5% of your portfolio in Bitcoin?
So two things with Bitcoin. One is that in its short history, it's really highly correlated with basically equity markets, so particularly the Nasdaq. So when the Nasdaq's going up, Bitcoin rallies. When the Nasdaq's coming off, Bitcoin collapses. And so it actually trades like a growth asset. So I guess the question you have to ask yourself is you can add it to your portfolio, but what diversification benefit do you get if it's just going to move in line with equity markets? The other thing is that it runs anywhere from 4 to 5 times the realised volatility relative to gold. So if you're going to hold sort of 4 to 5% of your portfolio in gold, because Bitcoin's 4 to 5 times as volatile, you probably only want to hold 1%.